What we're going to see, I think, in the Fed minutes in July is some hawkish talk. That really doesn't matter much because that was before the CPI and the PPI report. I think what's going to really matter is Jackson Hole. And what you're seeing in terms of quantitative tightening is that they've only sold 1/3 of the amount of bonds that they had expected to sell by this time, which means they're being more and more accommodative than the market had expected. I think you're going to see a reset of expectations in terms of the quantitative tightening timeline moving forward, and that these type of dovish actions, if we get another reasonable CPI print in September and maybe the Fed goes 50 basis points instead of 75 basis points or even 25 basis points, all of these type of pivots, the slowdown in tightening is going to lead to the dollar starting to weaken. We were kind of first to tighten. The dollar got a huge bid on that in terms of relative yields. As those yields have come in, those relative yields are less and less attractive. So we do think by the end of the year, despite the overhang in Europe, et cetera, that we could start to see some normalization of the dollar, and that will give good flows into the emerging markets. And that's going to be a long-term trend for the next 3 to 5 years. We could start to see some emerging markets outperformance.